joined by the Nobel Prize-winning economist Edmund Phelps. Mr. Phelps, good morning. Thank you very much for joining us today. I've got to go straight.
Thank you.
I've got to go straight to the issue, QE or not QE, Edmund. I mean, how much should the Fed pump into the economy at their meeting that ends next Wednesday?
I wish the Fed knew the answer to that question. I'm sure I don't. I just love to see some paper and pencil calculations, but you never see them. But I'm for some quantitative easing, and I'd rather see them err by having a little too much than having a little too little. I think we could use some stimulus. I mean, but I think the market will have to do most of the heavy lifting.
I mean, are you in the camp that says let's pump in 500 billion over a certain amount of months, or are you in the camp that says let's go big on this, let's go over $1 trillion?
I think I'd rather go with $1 trillion than $500 billion.
Why is that? Why not just, because the risk is, of course, Edmund, you're aware, as most other people are, the risk is that if you throw it all out there at once, you don't know what the impact is, so it doesn't give them much room to maneuver. If you do it in steady steps. I know that, but almost everything that the government could do, like fiscal stimulus or monetary stimulus or anything else, is going to be shrouded in uncertainty. We're really flying blind here. $1 trillion isn't all that much money in relation to the wealth of the economy, which is 80 or 90 trillion. I mean, so I think $500 billion just seems too almost symbolic. I would go for $1 trillion. Well, I mean,
but as I was starting to say before, the only way to get to a full recovery is going to require market mechanisms, going to require, in the long run, strong investment demand. But I'm hoping that with the weakening of the dollar that the quantitative easing is going to bring, there'll be finally a chance for the U.S. economy to really pump out some exports over the next couple of years.
How low could the dollar go, Edmund? And what do you make of all these tussles between countries about deliberately weakening their currencies? I mean, is this going to end in tears, currency wars, protectionism, and ultimately hitting the global economy?
It could, but I think there's reason to hope that, that reason will prevail. The United States is a sick economy. We deserve a chance to heal, and the best way to heal quickly is through exports. And that doesn't mean that the rest of the world has to go on bread and water. It just means that the rest of the world will export, will produce a bit less for its consumers. The U.S. will produce more for those consumers. But then the overseas countries can invest more, and they could use a perkier investment sector. They could use more investment and more growth.
Edmund,
so, especially Europe, of course.
Employment is your field of expertise, and as we know, unemployment has been stubbornly high despite all the measures that have been implemented by both the government and the central bank. Why is unemployment so stubbornly high, and what's it going to take to bring it back down?
I'm so glad you asked that question. I continue to be horrified month after month, year after year, with the popular analysis, which says that the problem is not enough demand, a deficiency of aggregate demand. For economists, that means there's too little money chasing goods. So the whole, according to this populist analysis, the whole problem can be solved. The whole slump can be eliminated through a sufficient monetary stimulus. And that's just wrong. I would guess that at least 3/4 of the decline of employment is the result of structural forces, and there isn't anything that monetary stimulus can do about that.
Edmund, wish we had more time, but thank you very much for joining us today. Edmund Phelps there,
Thanks.
the Nobel
Pleasure.
Prize-winning economist. Now,